So the TSX hit another record close today, helped by higher gold prices, but U.S. stocks faltered after recent gains. Let's take a look at the action with Ross Gerber, President CEO of Gerber Kawasaki Wealth and Investment Management. Ross, thanks for joining us today.
Thanks for having me.
Okay, what do you see as the reason behind the S&P's bit of a stall today?
Well, the S&P's come back substantially from where it was just like a month ago. So when you look at like a valuation perspective, you know, the market is fully valued and we're back to kind of where we were at the start of the year. And that's actually really great news because we were down, you know, pretty substantially just a month ago.
Okay, so one of the gainers today was Tesla, some of the other tech stocks, not as much, but Elon Musk was in Qatar basically committing to lead the company. The remark was very brief, but people took a lot of enthusiasm from his remarks saying he's going to lead the company for the next 5 years.
Yeah, you know, he also did some interviews today from Tesla, even on CNBC, which is a super rarity. So it seems like Elon might have gotten my message that he needs to get back to work at Tesla. He needs to start doing positive media. He needs to get out of the government and get out of all the divisive kind of comments and things that he was doing that was hurting the brand. And it looked like he's actually taking very concrete steps to improve the situation at Tesla, which is certainly a good development.
Okay, so a lot of that has to do with how he outwardly represents the company, right? He just has been sort of absent and they've been flailing as a result. What do you think he needs to do to change course in a more functional way?
Well, I mean, you're not going to change Elon, so I'm not going to try to go down that path. I think it's mostly where his focus is and where his communication and how his communication is done, which really affects, you know, Tesla, its sales and the brand substantially. But this is a crucial time at Tesla with the imminent launch of robotaxi, and having them back in Austin is crucial to this success of them launching this, because clearly this is a product that's not quite ready to go. So, you know, there's a lot of work to be done at Tesla. So it is good news to have them back there, but there's a ton of challenges that they face, and that's kind of Elon's thing.
Okay, let's talk about earnings as well. What have you seen so far from the earnings that have reported?
Well, earnings were good in Q1 because essentially we did not have any impact of Trump policies or tariffs or the way it affected consumer sentiment, you know, when that happened in April. So Q1, you know, was pretty solid. That's kept the market going, and valuations make sense when earnings are growing, let's say over 10% on the S&P as a whole. And even among the consumer companies like Walmart, we saw Home Depot today, you know, sales have held up. But what we're worried about is the next 6 months, not the last. And that's really what we're trying to gauge. So there was a big pause in April on consumer spending and corporate spending. And now it seems to have gotten a little bit more back to normal as the tariffs were mitigated and sort of walked back. And that's basically our premise as investors, is the more that they walk back tariffs, the less tariffs there are, the better it is for the global economy and for the United States.
Okay, so as you mentioned, some of that tariff situation has to work its way through still, and will likely come in Q2. With that in mind, give me an idea of why Costco is one of your top picks.
Well, exactly for that reason, because Costco is a big winner when costs are going up for, you know, consumers. That's why it's called Costco, because it's literally like the best place to shop for value. And so as prices go up, stocks like Walmart and Costco benefit. They're considered consumer staples, where consumer discretionary companies, where people are spending on travel or Airbnb and things like that, that's where people cut back when they're concerned about costs, where there's rising costs in their day-to-day life, like with food and other inflation. So we think Costco is going to be a beneficiary from the future environment that are created from tariffs.
What about Eli Lilly? Why do you like Eli Lilly moving forward?
Well, ultimately, Eli Lilly seems to have won the weight, you know, loss drug game in having more effective drugs than Novo. And we used to own both, and we recently sold our Novo and added even more to Lilly on this decline, because Lilly also has many other drugs and opportunities in different markets of medicine that we think are extremely good. But ultimately, this obesity business is just a massive business, and one that has enormous growth. And partnerships with companies like Hims really give access to a whole new big demo of consumers who use these kind of products. And then on top of the fact, the demand globally is unbelievable, and they're coming out with a pill. So a fat loss pill is just a huge upside, and I think the potential markets for this over time is in the hundreds of millions of people.
Okay, your last pick we have right now is Genius Sports. Tell me about Genius Sports.
Yeah, Genius Sports is a smaller company. It's about a $2.5 billion company that owns all the data for the NFL, for March Madness, Premier League. So there's two companies that own data for all the sports leagues. One is Genius Sports, and Genius is moving into ad tech, where they support all the online gambling companies with the data, and so they're getting a cut of online gambling companies' revenue, and they've created lots of in-game betting opportunities through a thing called BetVision, which is on FanDuel. But where it's really interesting to me is in the ad tech, because we all know that we're paying a lot more attention to sports when let's say the games are close than when the score is very far away from each other. So, getting data, especially inter-game data on when to run ads and which ads to run, and then customizing it is really a great opportunity, because companies are spending so much money on advertising on sports because it's the most effective place to advertise. But oftentimes they're just getting the short end of the stick, depending on when and what happens in the game. And so a match like, at the Italian Open, where, you have Sinner and Alcaraz, a close match, you might want to advertise on that a lot more than a blowout Game 7 like we saw the other day. And so that's where I think ad tech and data are going to mix, and that's where Genius Sports lies. And so we like this opportunity.
Got it. Ross Gerber, got to leave it there. So Ross is President and CEO of Gerber Kawasaki Wealth and Investment Management. Thanks for your time.